Hi, I'm Jamie Turney from Lawrence, Kansas. I'm here to talk to you today about permanent cash value policies and the policies that actually fall under the specialized heading. There's 3 of these. They're joint life, survivorship, and a juvenile policy. And they are special and they're very, very easy to remember. The joint life policy actually covers 2 lives. One face amount of maybe $200,000, but it covers 2 people. This would be perfect for business owners or even husbands and wives to have a policy like this. The price is based on their joint average age. So let's say, for instance, you have John, who's 60 years old, and his son, John Jr., is in his 20s, and they decide to open a business together. It'll be a lot less expensive if John can get a joint policy with his son because they'll base that on the average age, and they'll both be covered. That means upon the first death, only the first death, that insurance policy will be paid out. So if John Sr. passes first, that money or death benefit will be given to John Jr. and he can pay off the debts of the business. The second type of policy is called a survivorship policy. This policy is the same as joint life. It actually covers 2 lives. This one is a little bit different. Remember the movie or the TV show Survivor? The last one on the island is the survivor. This one pays on the last to die. For example, perhaps a family, a husband and wife, may decide that they want to take out a survivorship policy because if they pass away, the other doesn't really need the insurance, but they want to leave the insurance money for the children. So John and Mary may take out a survivorship policy. That way, when they've both passed away, the money will be sent to their children, the beneficiaries. And the last type of policy is a juvenile policy. This policy covers the life of a child, typically until that child is 18, 21, or 25, depending on the contract and the specific policy. The parent or the guardian is the owner of the policy, so remember that means they pay for it, and the policy must be converted or changed once that child reaches that specific age of 18, 21, or 25. At the conversion time, this policy will move from a term policy to a permanent policy. That means it will last till that child is now 100 years old, but the child does not have to prove insurability. Now remember the 3 types of policies that we covered. One being a joint life policy covers 2 lives but only pays on the first to die. The survivorship policy covers 2 lives again, but this one actually pays on the last to die. And the third policy is the juvenile policy, which covers the life of a child and the parent owns that policy. That policy must be converted once that child reaches a specific age. Those are your 3 types of specialized policies. Thank you very much.